Yeah, welcome back, everybody. I'm here with Chad McBain. My name is Luke McBain. Together, we are two brothers and Bitcoin. And today, talking about a video which you, Chad, sent me of the Bitcoin conference 2024. There is a part one to this video. It's the keynote speech by Michael Saylor. And we've already described in part one a little bit, like who is Michael Saylor and why is he an interesting figure to watch and to listen to? What does he have to say about Bitcoin? And why is the Bitcoin conference important? And we already mentioned also in part one that there were two presidential candidates speaking at the Bitcoin conference. And the takeaway from part one was a little bit Bitcoin is interesting, not only, but Michael Saylor made the case, interesting if you want to preserve value over time, and he compared that to different assets. So I just try to give a little bit of a summary of part one, and of course, everybody is also welcome to watch part one and
Hmm.
see what happened there. And yeah, we're just gonna, is that fair enough? Is that,
Yeah,
yeah?
I think that's a good summary. Yeah.
And we're just going to jump into the remaining keynote speech and see what else he was talking about and how he continued to make his point for Bitcoin. Maybe that's also good always to mention that, of course, now, I mean, we are here doing Bitcoin education. Again, we're not doing financial advice. We're more interested in the educational part, you and me, or primarily, or just interested in the educational part. We also have to say, of course, that Michael Saylor is biased, of course, towards Bitcoin. Like he
Right.
describes himself as a Bitcoin advocate. So you always have to keep that in mind when you listen to people. You know, what's their intention? What are they interested in? And doesn't mean they don't have interesting things to say, but you always have to keep in mind they have a certain position, and of course, they prefer their own position over somebody else's
Right.
position or anything. So it's also good to mention. Of course, both of us, we're also interested in Bitcoin, so that's why we're talking about that and not something else. So let's have a look at this video. And here he is, Michael Saylor at the Bitcoin Conference 2024. And without further ado, let's have a listen what he was saying in this section of his speech.
How much is digital capital worth? Take the $450 trillion, multiply by 3%. That's your entropy cost or your inflation cost. It costs the world $13.5 billion a year to take all of those parade of horribles when they're trying to preserve their wealth. If you put a 20 P to E on it, like you'd value a company or a long duration bond, that's worth $270 trillion. So digital capital is worth 10, 20, 15 trillion a year and is worth hundreds of trillions of dollars. Reality check. Is he full of BS? Well, digital capital is returning 55% for the past 4 years. Financial capital, the best in the world, is the bond. It's minus 5%. Imagine capitalizing your company or your country on a minus 5% instead of a plus 55%. It's obviously working. And now let's come back to my chart here. Global wealth, we can look at it like this, and we see the little Bitcoin, square in the left corner. But what's happening? Here's my macro Bitcoin forecast. It's 21 years. Goes out to the year 2045. What do I think will happen? Well, I've got a bear case and a bull case, but what I think will happen is that 55% ARR goes to 50%, 45, 40, 35, 30, 25, 20. It's between 50 and 20. It'll gradually decelerate till it's growing about twice as fast as the S&P index. And at that rate, Bitcoin's $13 million a coin in the year 2045. 13 million. It could be a 3 million bear case. It could be a 49 million bull case. But what is Bitcoin? 7% of the world's assets then. What about the rest of the assets? Well, I actually think that AIs and technology are going to revolutionize tech. We had no companies worth $1 trillion. Then we had a bunch of $1 trillion companies. You're going to see more because you're going to see companies with 100,000 AIs and no employees, and they're going to do the work of companies that used to have 100,000 employees. You're going to see mega corps develop, shipping robots and self-driving cars, and a company that gives a personal physician to 1 billion people without any doctors on the payroll. So clearly, equity is going to grow fast. Gold's going to get demonetized. Land will be less monetized. But look, here's the future in 2045. Doesn't look that revolutionary. It looks like today. It's just that Bitcoin is visible on the chart to you. When Bitcoin is visible, that's going to be the base case. Now, what are the implications of this?
All right, so I'm just stopping that now because obviously that's a lot of information to digest. And unless you're now, I don't know, something like a financial expert or investment fund manager, that's a lot of numbers, a lot of information. So let's try to break it down for somebody who's like a normal person who has a job and goes to work and makes a salary. So what does he want? What was he talking about here? What was his point?
Well, I think the real point there is the amount of global assets that are held or traded annually, and then just the category breakdown of that. And so currently, Bitcoin is a very, very small amount of that. But the projection, of course, would be based on the math that he's using, whether it's a 1%, a 2%, or a 5% part of that total growth, that total global assets over the next 20 years, brings Bitcoin out to certain dollar values. But really, it's an investment asset category that is very small right now, but is growing exponentially every year. And I think really that's all that most people need to take away from that. He is talking, obviously, in Wall Street talk or banker talk or investor talk or speak. But at the end of the day, he's just looking at the total global asset market and just projecting out Bitcoin's growth as a percentage of that global market. And he'll come up, I guess, with the figures he comes up with. But that's basically what we're talking about.
Yeah, and I just went back to this image which he's showing in his presentation. I don't know how well that is visible here now if you're watching on YouTube, but it's worth stopping.
fairly good.
It's worth looking at to try to wrap your head around what he's trying to say here, or what case he's making. As you said, here we see an image of, he says, global wealth is stored in physical and financial assets. In part one, we talked about physical and financial assets and how they retain value over time. And we said, well, actually, some better, some not so good. And actually, Bitcoin outperforms all of them when it comes to retaining value over time. But how much wealth is stored in different asset classes? And if you look at that, up there in the left-hand corner at the top, you see Bitcoin, $1 trillion US. Next is gold with 16 trillion. Then you have art, 18 trillion. I didn't know though. That's the part which I really didn't know, that there's $16 trillion stored in art, which he didn't mention, by the way, in his presentation. He talked about
yes,
gold.
He did.
He did.
Art was 70 plus years. I think it was around 72 years. Yeah.
Okay, so 72 years is how long you can store your value through art.
Yeah.
Cars and collectibles, 6 trillion. So, and this is a really fascinating chart. Like once you sort of try to sort of feel your way into that, you go like, wow, like this is how people store value globally. And if you compare that, that is not a lot. Like Bitcoin only has 1 trillion up to now, which seems like a humongous amount of money. But comparing that to cars and collectibles with 6 trillion, come on, that's still nothing. Like that's still not a lot. But below you have,
and those are horrible ways to store your wealth, by the way.
Yeah, I couldn't agree more. Like, I know, I couldn't agree more. And and then you have equities, and you have, of course, the classic is real estate. We talked about that, and then bonds and money. And he also made the point, I think, right now in his speech, that actually bonds aren't a great way to store value anymore. There was like over the last 4 years, I think, -5%. We can look at this chart again, which he
Yeah.
showed. But if you consider like the relationship of those to 1 trillion in Bitcoin and 300 trillion in bonds, it's so there's a lot of room for Bitcoin to improve. Apparently, like that's how I see this chart. Like this is
Yeah,
we're still at the
most people in the financial world, the BlackRocks of the world, the Fidelities, they believe that Bitcoin over the next decade or maybe a little bit less, but let's say 5 to 10 years, will probably come out at around a similar valuation to gold. So, you know, based on today, or at least when this presentation was given, Bitcoin would have to go up 16x, I guess, to hit what gold is at. But of course, gold will go up a little bit over time as well, just again due to money printing and inflation. But if we just use that figure, you know, if they're correct, even if they're only half correct, Bitcoin is still going to go up probably about 8 or 9x. So it's got a lot of growth potential for sure. Yeah.
Yeah. Absolutely. And also as a small reminder, I think I mentioned that in the previous one of the previous podcasts again and again, because it was impressive for me to hear that now we are like at or almost or slightly above the market capitalization of silver. And as you pointed out, silver has been around for several thousands of years.
Right.
So I mean, and Bitcoin is now in its short lifespan already at the level of silver. And so where we see how fast it is growing, and we also can see basically the future potential as a store of value. And yeah, so I guess that's let's say that's one of the points he's making. And then he was talking about the comparing basically the how it was performing and where he can see Bitcoin going in the future. Let me just see what he said his future projection was here. So his forecast for 2045, so in 21
Yeah, so
years.
I don't think you played that part yet. So I think we still have to play that segment.
We went up to this slide here, but yeah, that's where we're going to jump right back into. So he was already showing that. He said, well, this is what it could look like in 2045.
Right, yes.
And here you see it has already surpassed gold with 280 trillion, gold with 45. So that was a projection. Of course, this is a projection.
Yes.
And that's the point he was making. So interesting. First of all, to like contextualize Bitcoin a little bit to see where does it stand today in relationship to other assets, and yeah, and to sort of like yeah, and he's making the case there's still a lot of room for improvement, and as you said, some others are saying this as well, and they're saying, well, it could go up to gold, and he's even saying it could also surpass gold, and then of course means yeah.
And just, and I know this isn't financial advice, but if you look at that chart, even his projections, if you look at, well, all of them, real estate, and this projection is 1.336, whereas I think on the last chart it was 330 trillion. So real estate will 4x in this time frame. So he's already projecting that all of these things will go up. Gold, I think, was at 16. Here it's 445. So he's not just talking about Bitcoin, he's talking about the entire global equity market, right?
Mm-hmm.
So keep that in mind. What that also means to me is a lot of inflation as well coming down the pipeline over the next 20 years. But anyway, all of these things are in theory, at least in terms of the dollar, going to increase in value. But Bitcoin is by far the fastest horse in that race, according to this chart. So anyway, yeah, go ahead.
Yeah, and then he briefly also suggested where Bitcoin could be standing in terms of its value. Like he threw out some numbers there and said from there to there, it could be like that. So, okay, let's continue here. Let's just try to continue from this point and see where he's going with this.
Okay.
Is visible on the chart to you. When Bitcoin is visible, that's going to be the base case. Now, what are the implications of this? How do you make money? Well, let's talk about individual Bitcoin strategy. What should you do? Make Bitcoin your primary treasury asset. Convert your excess earnings to Bitcoin. Utilize subsidized credit. If the government will loan you money, borrow the money at cheap rates and buy Bitcoin, and find a tax-efficient way to invest the Bitcoin. What shouldn't you do? Don't quit your day job. Don't lose your focus on Bitcoin. Don't use margin loans and trade with leverage. You get wiped out while you're asleep on a Saturday night. That's not good. Good? 30-year loan for 3% backed by the government on your land. Bad? Overnight 10x leverage. So what's a typical person? Well, we actually model an individual, and we said, what if you had $750,000 in net assets and you made 200 grand a year and you're going to make 5% more every year and you got a savings rate of 25% and you can invest $50,000 a year? Well, there's a lot of strategies. You could be the normie and do a normal strategy, diversified portfolio. You can be a 10%er and you can put 10% of your assets into Bitcoin. You can be a BTC maxi and put 80% of your assets and put 80% of your earnings into Bitcoin. You could be a double maxi, and that's when you basically take an extra $250,000 loan against the house. And then the triple maxi is you finance the house for Bitcoin, you buy Bitcoin, you flip all your assets to Bitcoin, and then you move to a cheap tax jurisdiction where you actually can avoid some taxes and invest an extra 50 grand in Bitcoin, maybe a Singapore or UAE or something. What's the result? Well, this is the result. The normie ends up with $8 million in 21 years. The 10%er will more than double that. The maxi ends up with 100 million. The double maxi 150, the triple maxi 214 million. You can see the power of leverage, and the choice is yours. And you can also see, it takes 15.9 Bitcoin to be a triple maxi. 6.25 Bitcoin will make you a wealthy person. Let's talk about corporations. Dues. Convert your...
Okay, before we go into the corporation part,
we don't even need to, I don't think.
All right.
Yeah.
So he's like making now a case. Why is this interesting for you, basically, as a normal wage earner? Why is the whole Bitcoin discussion? Why might it be interesting for you? And I was just thinking again, like, we're not giving financial advice, and this might now sound like financial advice to what to do with your money. So that's not the case. And we're not making the case that you should follow his advice. It's just pure information, what he's delivering in terms of some scenarios which could happen. But sorry, maybe I just interrupted you and you wanted to get into his presentation and say, yeah. So what's he talking about here? What's the argument which he's making here in this section of this presentation?
I think the argument would be based on these hypothetical scenarios playing out based on growth and projections that clearly they've come up with, that instead of investing in your typical, well, heaven forbid you invest in cars or collectibles, but most people would probably put their money in a savings account, which is a bad idea in terms of investing, or they might do some type of diversified stock portfolio, which is better than putting it in the bank, but still probably not after fees and taxes, probably not keeping up with inflation or anywhere close to it. So I think what he's saying is, this is the best way to invest your savings, I suppose. Obviously, people have to buy homes and stuff like that. But what you would allocate for the rainy day fund or the savings fund, he's saying consider buying Bitcoin. and investing in that, because well, he's got a 21-year time frame here. You're probably, and we're not probably going to show this chart, but basically it works out to, worst case scenario, he has Bitcoin appreciating at 21% annually over the next 21 years. The median would be 29%, and of course, the high end is the bull case, if you will, would be at 37%. And I don't know if we're showing this or not, but the end result would be a Bitcoin according to his projection, 21 years from now, worst case scenario, a full Bitcoin would be worth about $3 million US. His base case, it would be $13 million US. And his bull case, it would be $49 million US for a Bitcoin. Now, of course, Bitcoins are broken down into 100 million Satoshis, so you don't need to try and get a full Bitcoin, but he's just saying buy as much of a Bitcoin as possible over the next, 5, 10, 15 years, because it will be. Now, the thing that people need to understand about those numbers, they might sound completely insane, but there's two things I'll point out. And the first one is really important. Those are not inflation adjusted. So if we assume a 2%, which is what we talked earlier about what Western governments always like to achieve, a 2% inflation rate, 21 years from now, that's 42%. And if we double that, it's 84%. And I always prefer to double what the government says because I don't believe what they say. So when he talks about a $3 million Bitcoin, it's not $3 million in today's purchasing power. So if we take my pessimistic point of view and say that inflation will be 40% a year, basically it's only 16% of that 3 million. So what's that? That's roughly $480,000. So your Bitcoin in 21 years will have purchasing power of $480,000 today. Okay. Now it could be better than that. I'm just saying that when you see numbers like 3 million and 13 million and $49 million, keep in mind that's not inflation adjusted. The second thing I would say to that, because it sounds so outlandish probably to most people, and while you were talking, I thought I'd just check. So I Googled it. So we're recording this on July 31st, 2024. So when you're watching this, keep in mind when it was reported. On July 31st, 2014, Bitcoin was $586. I'll check right now while we're on the phone, or while we're doing the podcast, sorry, just what BTC is today. So right now it's $66,395. So when you hear numbers of millions of dollars in 21 years for a Bitcoin, it sounds crazy until you realize that he's talking about 20 years from now. And 10 years ago, Bitcoin was $583. Yeah. And now it's $66,000. That's more than 100x in 10 years. So 100x 10 years from now, or sorry, 20 years from now, it's almost it's easy to see how it could get to that just based on history. Now, I'm not saying it will, I'm just saying that when you start hearing numbers in the millions, you think, how is that possible? Well, 10 years ago, it was only a few $100s, and now it's 66,000. So just keep that in mind.
Well, that's an excellent point. Like, I mean, first of all, yes, looking back, we can't project the future even by looking back, but looking back, this development would have seemed like 5 years ago or 10 years ago ludicrous to everybody to say Bitcoin will be one day $66,000. Like people would say, what? This stuff, never. That's not going to happen.
Here's a quick anecdote. And I don't know whether it was 2013 or 2014, but I remember I was listening to an interview. It was actually a tech interview. and they were interviewing Chamath Palihapitiya. Doesn't matter if you know who he is or not. And he was talking about, he thought that there was something to this Bitcoin thing. And the interviewer was like, what do you know? And so he was explaining this. So I was like, oh, so I went online and I did a little search. I'm like, what is this Bitcoin? You know, this internet money that he was talking about. And it was 800 and some dollars Canadian for a Bitcoin. And I just thought, I'm not spending $800 on this crazy internet thing. So I don't know, you know, today in Canadian dollars, I'll quickly check. So as of right now, Bitcoin is $91,640 Canadian. So 10 years ago, it was 800 and some dollars. So yeah. And yeah, it was many years after that before I started to do the research and start to understand and take it much more seriously. Yeah.
And as I always like to say, there's a psychological thing happening, and I think markets are also driven by psychology. Like it's what do people ascribe value to, and how is there also a use case and all that. But it's also dictated by beliefs and fear and greed and all that. And the psychological, I always find the psychological component, if I may call it that, of Bitcoin very interesting. Like there's always this part of looking back and going like, back then everybody would laugh if you say $66,000. There's always this element of there's this hype phase where people go like, this is crazy, look what Bitcoin is doing. And then there's this phase where everybody like goes asleep basically and has no interest in Bitcoin anymore. And said, yeah, well, it's not doing anything. Whereas, okay, it's dropping, but it's stabilizing at the same time. And then there's this third aspect where people go, it's too late now anyway. And it's every time like there's these, and this is all just like psychological, I think, in a way. And the way he's trying to present that is to make people aware of where are we actually standing right now and where could this be going. And it's not this thing of you believing now it's too late because, okay, it's at $66,000. It's not anymore at $600 Canadian or whatever. Now it's too late. Why bother? That's not the case he's making. He said, if you start like, saving or transferring some of your savings into Bitcoin, that's what's going to happen in the next 21 years. So this notion that it's too late now is, again, that's just a feeling. That's just a feeling which you get through these hype things and these four cycles where you go like, apparently there was a hype, but I missed it. Now it's too late. No, that's not what we're doing. That's not what we're talking. I think there's a misconception going on somehow, a psychological misconception.
Well, and this will take more than this podcast, but the other thing is at the other end of this, when Bitcoin's price stabilizes at whatever value it is at that point, there's also the technical aspects of it can't be inflated away and it can't be seized and all the other stuff. So it still would have value to most people as just a stable place to store your money. So there's all of that. So part of this is, what Bitcoin is. And then part of it is, of course, investing in it now because no, it's not too late. And it probably won't be too late for a long time in terms of growing wealth. But even once it gets to a stable place and it isn't appreciating at 55% a year, whatever that was, it's still going to be probably the best idea to place your savings because it won't be evaporating over time, in terms of inflation. So there's that aspect as well. Quick little anecdote. I was listening to your point there a few minutes ago, and it reminded me of a gentleman I saw about a year ago, and he was talking about, so he had bought Bitcoin at less than a penny.
Oh no.
And
no, I'm gonna hate where the story is going. Okay, please. Yeah, sorry. Continue.
And he said it went to $1, and he kind of thought, oh, that's really interesting, and so he bought a bunch more, and he said when it got to about $20, he thought these people are crazy, And he said when it got to $100, he said, okay, that's it, and he sold it all, and he said he made hundreds of thousands of dollars. And then he said about 3 years later, he cashed it in. He was happy. He bought a house. He bought a car. He said about 3 years later, he looked at the price and it was over $1,000. And he thought, what the heck? And so he said, he started accumulating again, but much harder than when it was a penny,
Right, of course.
So he said, he does have some Bitcoin now, but he said, he couldn't wrap his head around, even though he understood all this, he couldn't wrap his head around that this is where it could potentially go. He thought at $100, everything was insane because he'd gotten in so early, and now to your point, people will be looking at it saying, well, it's 60 or 70 or $80,000, depending on what country you're in. But if you look at his long range projections, this is very early. And then the last thing I'll say about that is, and I don't know how many people held Bitcoin in 2014, but current estimates right now is there's roughly about 250 million people in the world that hold Bitcoin of any amount. And there's about 500 million people that are invested in crypto, any amount. Well, 6 years ago, that number was less than 50 million. So there's this growth aspect to the ecosystem itself. So forget about dollar value. Just look at users or investors, if you will. And if we look at it like the internet, and actually the Bitcoin network is growing faster than the internet so far. For anybody who was around in the mid to late 90s, the growth factor of the Bitcoin network is faster than that. And we know what happened with the internet, And I know even in my own industry, many people in the early 2000s telling me that the internet was a fad, and luckily I was too ignorant, I guess, or naive to really think about it. It was something that I was used to, so I just kept using it. Most of those people aren't in business anymore.
Yeah, and we're moving away from this idea and also from let's just call it what it is. I don't know, stupid propaganda that it's a Ponzi scheme. I mean, if you just look at the sheer numbers of people globally who are now involved in this, and if you think how stable the network has been and is still over time, and how I think this notion needs to go. Like, first of all, the notion needs to go that this is only a get-rich-quick scheme somehow, and that this is a Ponzi scheme, and it's important to get out at a certain point when you're up. Otherwise, everything will go down. I think that, I mean, you never know how things are going to go, but it's becoming just more and more unlikely. And as you said in the previous podcast, you have two presidential candidates speaking at the Bitcoin conference. So for sure, this is not about a get-rich-quick scheme or Ponzi scheme anymore. This is about something quite different, which has taken on, political interest, and it's a technology which, is here to stay. It's going to shape the way how we live, and
I think if people forget about the numbers and getting rich, and actually and we talk about this all the time, reading the Bitcoin Standard, the book, but if you start to look at what Bitcoin, first of all, what it is and why it was created, it is not about getting rich quick. It's an alternative financial system. It's the rails to an alternative financial system to the current system we have. That's at its base. That's all it is. Now, because it's growing and you can get in at certain points, then it feels like it could be a get-rich-quick scheme because the number keeps going up over time. But really what it is, it's a lifeboat from a system that through tax and inflation and seizure, basically, steals is a provocative word, but takes our money. Inflation, in my opinion, is a tax. Governments choose to print more and more money. That is a tax on its citizens. So we can call it tax or we can call it inflation. That's a nicer word. But at the end of the day, long since before I was born, this was the financial system that we lived in. And I didn't know that. Nobody talks about it in school. And these are things that people need to, I think, educate themselves a little bit about. So don't think about Bitcoin as a way to make money, although I do believe that you'll do well if you invest in Bitcoin now. But think of it as an escape route from a financial system that right now, even the most financially illiterate person is feeling the effects of. The system is not good, because you can blame all the grocery stores you want. The fact that your groceries are more expensive than they were 4 or 5 years ago is partially the corporation behind the store, but it's mostly your government or multiple governments printing currency into oblivion. Yeah.
Yeah, I like the metaphor of a lifeboat. That's a nice image. And I think as usual, we have to just readjust our thinking, because lifeboats, of course, were always something very tangible, like a piece of property or a piece of gold or something where you could say you could touch it and you can, put it somewhere, or you know it's there, it's real. And now we're saying the lifeboat is something digital, and you go like, what? Like something which is not like what? Just numbers, a code? That's a lifeboat. That's something which has permanence. So I think that's, again, what I saw, the psychology of Bitcoin, which I think then will change over time and say, yeah, this is a lifeboat. This is just as real as something tangible. And yeah. So lifeboat metaphor is nice. Yeah.
So I think if people think about it that way and do the research from that perspective, yes, I believe that if you invest in it today, you will definitely make money. But really what you're doing is you're giving yourself an off-ramp from a current system that is just not working for most people.
Well, that's some very good closing words for today. That was really an interesting talk. Thanks for sending me this video from the Bitcoin conference, and from Michael Saylor's keynote speech. An interesting character. There's plenty of videos on YouTube where he speaks about Bitcoin, and he's a very engaging speaker. So check that out. But yeah, but thanks for making me aware of this, and it's really interesting to go through that.
Yeah, my pleasure. It's interesting stuff to delve into, and hopefully somebody gets something out of these discussions.
Let's hope so. Okay, so see you next time.
All right, talk to you later.